Hello traders, have you ever been in a situation where you have professionally or correctly analyzed the market and you have identified a high probability zone to take trades from, and you placed a pending order right there to either buy or sell, and then you find price coming to your high probability area of interest and slicing through it without any resistance, and you are like wondering, what the hell is happening here? Is anyone watching over my shoulders? Well, let me announce to you that no one is watching over your shoulders. Millions and millions of other traders out there are passing through that same exact situation. It is indeed a huge problem for traders in the market, and that is why I'm making this video as a solution or to help you to stay out of bad trades or taking wrong trading decisions. So if this is what you would like to learn today, you will need to stay with me till the end of this video. Alright guys, welcome back to Rally Top Investing 3.0 SMC Masterclass. Lower time frame entry versus higher time frame trap. Take a look at this chart. This is USD CAD daily time frame. Now you can replicate this on any time frame, but remember that the professionals tell us that the higher the time frame, the stronger the signal. Now this is daily time frame. As you can see, we are pretty much bullish, and now price printed this high. Why is this high a valid high? It is because it's taking inducement. You know that high or low cannot be confirmed until inducement is taken out. So once inducement is taken, that high is now confirmed. Now where is our higher low? Well, we need to go back and find our higher low. So this is our higher low. Why? Because this high took out this inducement here. This high is confirmed before this higher high. This is the current higher high, but this one was confirmed here when it took out inducement. And now you know that your higher low cannot be confirmed just yet until price travels back up to take out this major structure high and has to close above it, and that happens there, and that's known as break of structure. That's your boss. So once your boss has been established, now your higher low in the case of a bullish structure is confirmed. So now we have now mapped our structures professionally. This is higher high, higher low, higher high. So we now have our trading range, range low, range high. Now let me use horizontal line to show you that this is our swing low, and that swing low is what I call chalk. Why do I name it as chalk? Is because if price comes back down, because we are bullish, if price comes back down to take it out and price closes below it, this will become a change of character. Apart from that, this is our range high, our swing high, and this swing high, I name it as break of structure. Why is that a break of structure? Because we are bullish, so our expectational order flow is for price to continue to go and break this structure high and continue going higher. So this is our trading range, range low, range high. So what is the next step? The next step is, after taking out inducement, where are your areas of interest? Only two areas of interest work within your trading range. And now the first one is known as decisional area of interest, which happens immediately after inducement has been taken. And one more thing, you need to focus on order flow other than OB. Your order flow is primary and OB is secondary. So now this is our order flow here, but look at this order flow. It's already mitigated by this inducement here, so we cannot use that. And so where is another area of interest we can look at? Well, your extreme is this order flow. This is a valid pullback. This is your extreme area of interest, which is high probability compared to decisional area of interest. And therefore, we have finished analyzing the market. If you are a true SMC trader, you will understand what I'm talking about. So all we need to do is to wait for price to come and tap us into this market and go long. Now, the only one more thing you can do is that when price gets to this zone, you can go to the lower time frame to confirm it if you so desire. But if you want to take your trade directly from here, then you can place your buy order here, because we have done all the analysis, and give a buffer to your trade and target this high. And this will give you over 2R, which is a decent trade, over 2R. Okay, so let's continue to play price and see what happens. Okay, price is into our zone now and is reacting off of that zone. It wants to take us higher, so let's see. Boom. So what happened? Price not only took out our area of interest, it also took out this last major low here, which is a chalk. This is our change of character here. It took it out. It closed below it, meaning that we have been converted from this bullish structure to bearish structure. Is that correct? That's correct, because that is what you will see. You would think that because it's a major structure low on the daily time frame, and therefore now that price has closed below it, we are now bearish. We have been converted to bearish sentiment. Okay, so if we are bearish, we want to start looking for opportunities to go short. But first of all, we need to mark out our inducement to confirm any low. Without inducement, you cannot confirm a low or high. So where is the inducement here? Well, look at this inducement here to confirm the low. This inducement has to be taken out before low is confirmed. So we continue. Okay, so our inducement is still okay where it is. So we are waiting for price to take out that inducement. Once price takes out that inducement, where is our area of interest? Because we want to go short. According to the chart before us now, on the daily time frame, we want to sell this market. And so where is our area of interest here? Our zone. Well, if you say this is your zone, it is already mitigated. Now, where is the next one? Look at the next one here. The next one is here. So this becomes your unmitigated zone. So if price taps into it, we want to go short from there. Now, remember, it has taken us out here, first of all. Now, I'm going to tell you the reason why we were taken out of this market. Because some of you will regard this as high probability zone, that this is a valid zone, that this is a valid trading range. No, I'm going to tell you why this is happening. But I just want us to finish everything first before I tell you why this is happening. So now, this is an unmitigated order flow. If you think that this has been mitigated, no. These are equal highs here. Okay? So this is unmitigated. And now after this, every order flow is mitigated. OB mitigated, order flow mitigated, everything is mitigated. This is the only one. Okay? So once price taps here, we want to go short. But I will advise that always wait for confirmation on the lower time frame. Now, so let's continue. Remember, this is still our inducement. Our low cannot be confirmed until this inducement is taken out. And remember, this is the area of interest we want to go short from. Okay, so look at what has happened here. Price took out our inducement to confirm this low. So this low now is major structure low. And now after that low, so where is our trading range now? This is our high and this is our low. Okay, so this is within our trading range. So price has tapped into our area of interest here and want to go short from here. Now, imagine you are an inexperienced trader and you place your pending order here to go short. Give a buffer, and then you are targeting this low here, which is okay. There's nothing wrong about that. You target this low, and that will give us over 3 hours. Okay, fine. So let's continue and see what happens. Now, boom. Can you see that? Price has already taken us out of the market. Why is this happening? We entered a long position here, it took us out. We entered a short position here, it has taken us out again. So what is going on in the market, guys? I will like to show you what goes on in the market. That's why I'm making this video. Please watch it to the end. Now, but if you are yet to subscribe to our YouTube channel, please do so immediately. And turn on the notification so that anytime we publish a new video like this, you will be the first to be notified. And if you are yet to join our free Telegram channel, please do so, because we post high probability trade setups there sometimes. And you can leverage on it and make some good money for yourself in the market. Okay? Now, if you want to become part of my YouTube channel members, the doors are open. If you go to our YouTube channel page, you will find the subscribe button. Right by the side of the subscribe button, you are going to see a join button. That join button is YouTube membership. Okay? Once you click that join button, it will take you to another page. Right there on that page, you will realize that we have 3 tiers or 3 levels of membership. Number 1, we have the Bulls level. The Bulls level require that you pay 2,000 monthly. If you like what we are doing here, if you like the contents we are dishing out for free here, you can support us by giving us 2,000 naira every month. Okay? And then you will have lots of perks and other benefits that you can get from us. Okay? Including high probability trade setup. That's for the Bulls. You also have the Super Bulls. That one is required that you make a subscription of 10,000. Okay? And you have more perks and you have more benefits. And then the third level is the Commandos level. At the Commandos level, you are expected to pay 20,000. To make a subscription of 20,000 monthly. Okay? And the higher you go, the higher the perks and the benefits you will get. So if you are interested in supporting us, please become a member by joining the YouTube membership. Okay? Now, so we are here now. We have been taken out of the market. Nevertheless, let's continue to play price. So we have only one option now left, and the option is, if it takes out this major structure high with a candle wick, then we can leverage on that to take price lower. Okay? Let's continue. Okay, so as you can see, price took out this major structure high with a candle wick. This is not a change of character. This is simply liquidity sweep. So if you go to the lower time frame, then you can take price lower, like I said before. Now, why did this happen here? These two places. Why did it happen? Why did price take us out here when we wanted to go long? It took us out. And when we thought we were bearish, price now went back higher. We placed a pending order here to go short. It took us out again. And then continued to take out this major structure high. What happened? Now, there are 2 reasons why this is happening. These 2 reasons have kept a lot of traders in comatose. These 2 reasons have kept the accounts of traders at comatose. Until you understand these 2 reasons, you will always become a victim of this type of trap. Now, let's start with this here. Why did price take us out here? Why? Now, for us to know why, first of all, let's go one time frame higher. We are on the daily time frame right now, so let's get to the weekly time frame. Now, let's look at the weekly time frame. What is happening here? Look at what is happening here on the weekly time frame, guys. This is very important. Please follow me step by step, and then you will understand. Look, this is our major structure high. This is our swing high, and here is our swing low. Everything inside this high and low, they are internal structures. We are pretty much like consolidation market. That is, I'm talking about sideways movement of price. Now, how do we capitalize on these internal structures to take trade? Now, on the daily time frame, we saw this area as being completely bullish, whereas it is internal structures of the weekly time frame. Okay, that's number one. Now, two, this is a high, internal structure high. Why is this a high? It is a high because it took out inducement here. Please watch this video over and over. So inducement is taken out there to confirm this internal structure high as a valid high. Okay, now your higher low, this low here cannot be confirmed just yet until price goes back up to take out this internal structure high here. That is known as break of structure, but this one is a minor break of structure. Once that break of structure happens with a candle closure, then your internal structure low here is confirmed. So you have your high, internal structure high, and internal structure low. Now price has taken out this high to create a new higher high, and for this new higher high, for this high to be confirmed, it needs inducement. And where is the inducement? Your inducement is here. But on your daily time frame, you mark this as chalk, change of character. Whereas on the weekly time frame, this is simply an inducement. Okay, this is where the problem lies. Always go one time frame higher before you mark your chalk on your lower time frame. Once you mark your chalk on any time frame, go a time frame higher and check if where you mark as chalk is actually chalk on that higher time frame. Okay, because if it is an inducement, and many times it is an inducement on the higher time frame, and once it is an inducement will be taken out before price travels back higher in the case of a bullish structure. Okay, so this is our low, this is our high, this is our trading range, and now inducement has been taken on the weekly time frame where you mark as chalk, and after inducement you know that you need to look for your area of interest. Now if you mark this as your order flow, is already mitigated by that weekly time frame inducement, so you can now use this OB, since this is the only valid area of interest that we can mark here. So that's your OB, and as you can see, price came tap into that weekly OB, and that is the reason why price is pushing up. This is our trading range: high, range low, internal structure range high, range low. Forget about these ones here. These ones are the daily ones. These are inconsequential. This is your major internal structure low and major internal structure high. This is your trading range. So that's why price took us out here, because this was actually an inducement. Any OB sitting at inducement, 70 to 80% of the time will be taken out. That's why this happened here. And after inducement, price tapped on this weekly time frame area of interest, and it pushed price higher. So that's the number one reason why your OB on the daily time frame could not hold. Whereas on the daily time frame, you thought after taking out this chalk on the daily time frame, you thought we have been converted to bearish. No. Whereas on the weekly time frame, we are still very much bullish. Major structure is bullish, internal structure is bullish on the weekly time frame. So that's the first reason why you are losing money. why your area of interest will be taken out. Now look at this. Now we entered a sell position here on the daily time frame and price took us out. Why did we enter a sell position here? Why? Whereas on the weekly time frame, this is your trading range, we are bullish. So why will you enter a sell when the market is swinging bullish? Why? Because if you had gone one time frame higher, you would have understood everything that is going on here of the manipulation of the market. Can you see that? We are bullish, so you don't have any reason to want to enter short here. Now let me take you back to the daily time frame and show you the second reason why these things happen. Now this is where we took our trade. Okay, let me knock out this one to make the chart clean. Now this is where we took our trade from. So and price blew through it. It sliced through it. Why did that happen? So I want to take price out here where we entered long here. Let's see what we can do there. Okay, so let's now get to the 15M. Please follow me step by step and you will get to understand what I'm talking about. Okay, so this is where we took our trade from on the daily time frame. This is the low where we took our trade from on the daily time frame. Now take a look at this carefully, guys. I'm zooming in so that you can see it clearly. This is the low where we took our trade from, this low here. Okay, now take a look at this low. You see these dotted lines you find here, this dotted box that you find here. This is the kill zone of New York. Okay, now I want you to understand that every session high or low is a huge liquidity pool. Any area of interest sitting on any liquidity will fail most of the time. That is what is happening here. Now sessions high and low are huge liquidity pools. So how can we take price from a zone that is sitting on liquidity? That's why we were taken out of the market. This is New York kill zone. This is the low of the New York kill zone. So we placed a buy order here, and because it is a liquidity pool, price had to take us out. You need to always check out for these things before you pull the trigger. Before you click buy or sell, make sure you confirm everything. Look at the sessions highs and lows. That OB, that area of interest, that order flow that you marked, is it sitting on liquidity? If it's sitting on liquidity, then that becomes a low probability zone, because the likelihood of price taking it out is high. So please check this again and again. Go over this video again and again so you can understand exactly what we are talking about. This is the way for you to stay out of bad trades and bad trading decisions. If you like the video, don't forget to give us a like so that YouTube algorithm will show it to more traders like you want to learn how to trade the market professionally. All right, guys, I see you in our next video.